How the software works is it's designed for direct users, taxpayer, who goes online and wants to save taxes, and it's going to be used by other CPAs to do tax planning for their own clients or CPA firm. It's going to be for both. And I'll show you, how it looks and how it's done.
Thanks for joining us for this special live session of I Have Questions for Ashish. It's myself and Ashish tonight, and we're excited to get started. And of course, we have our sneak peek of TaxMD towards the end of the call, so stay tuned for that. I'm going to go ahead and start our presentation for tonight. So this is our monthly Q&A, typically exclusive to our amazing community of clients who are proactive, curious, and committed to building wealth the smart way. But since tonight we're also getting an exclusive sneak peek of TaxMD, we've opened it to the public. You brought the questions and we are bringing you the strategic answers. We will get into those in just a second. If more questions come to mind, please drop them in the chat and we'll cover as many as we can at the end. Now, I'm sure most of you have met our speaker for tonight, but if you haven't, I'd love to introduce Ashish Acharya. Ashish is our CEO and founder and lead CPA here at Investor Friendly CPA. He's the brain behind our entire ecosystem, including our outsourcing firm, full-time employee, our charitable arm, the IFC Hope Foundation, and our tax planning software, TaxMD, that will be launching very soon. Ashish doesn't just talk tax strategy, he lives it as a real estate investor and business owner himself. He knows exactly what it takes to save money, stay compliant, and make smarter financial moves. He and our team of CPAs are here to help clients like you do the same. Today, he is breaking it all down and answering your questions live. Now, we've mentioned this before, but if you're one of our clients who have been receiving these guides that we've created just for you, these resources are part of our generational wealth formula, which are now also on our website for just under $2,000. That means that you're already receiving this added value for free. With the end of the year approaching, now is the perfect time to take full advantage of these guides. If you have any questions or want to upgrade from tax preparation with us to proactive tax planning to maximize your time with your CPAs, just let us know. We're here to partner with you and help you along your wealth building journey. We're also developing a lot of videos that dive deeper into these guides, so make sure you're following us on social media. On YouTube specifically, the links are included in the guides, but we wanted to highlight that if there is a topic that you're interested in, a guide or video is probably coming, or you can always ask us or your CPA if we already have that resource available, or if maybe we can create one. If there are any videos that resonate with you, please and share so that we know what content you want to see more of. And a lot of our clients already know this, but if you're new here, tax planning is a long-term game, and we will be sending hundreds of strategies to you. You probably won't use them all in the first year, but maybe you can in the years to come, which is exactly why we've developed the software that you're going to be getting a sneak peek of tonight that we mentioned earlier. It'll give more people the opportunity to access these tax strategies that we're talking about today and apply it to your own personal financial situations with the help of AI. This essentially makes tax planning more accessible and affordable, which is really exciting. We'll give you the opportunity at the end to join the waitlist if you haven't already, and for that sneak peek. Another pretty big announcement before we get into your questions, which we will momentarily, I promise, is that we are now offering bookkeeping. So if keeping up with receipts, expenses, and reports has been pulling you away from your business or is taking time away from your planning process with your CPA, that should be used for growth and strategizing and not organizing. You should definitely consider adding this to your plan because keeping up with these things shouldn't be a burden. It should be a tool, and you'll have an opportunity to add this onto your plan in the next few months when we reach out to you about working with us again. All right, now that we have those housekeeping things out of the way, let's dive deeper into some questions that we've received for this session.
Perfect. Basically, what we're going to do today, guys, we will go through very basic questions that we have received, and then we'll jump into the software and then talk about tax planning, year-end tax planning, some of the things you can do. And we'll keep on adding those in the next webinars. And we'll also send you the actual guides that you can use. So let's look at this question here. Someone asked, they are relocating to Florida and plan to rent out our current home in California to our daughter. Will maintain a formal lease agreement, charge fair market rent, keep the detailed record of payments and expenses. After at least 2 years of renting to her, we are considering selling the property using 1031 exchange to defer capital gains. So they're asking, if we rent our house to the daughter, can we do 1031 exchange? So let me explain this. The reason I picked this question is this applies to so many people. Whoever asks this question is missing out the one big tax savings, which is Section 121. Meaning you might not even need that 1031 exchange. You could just sell it under Section 121. If you do that, up to $500,000 would be tax-free anyway if you're married, right? So you might not even need to do 1031 exchange. However, somewhere like in California, and if you have a lot of appreciation, more than that $500,000, Section 121, then you can use both. You do first Section 121, pay no taxes up to $500,000, and the remaining you can defer with capital gain. But I usually tell them 1031 exchanges are complicated, have some restriction. You have to buy another property that you might not even like. So if your gain is already managed by Section 121, where you don't have to pay any taxes, you're not even deferring it, you're not paying anything, then don't even do 1031 exchange. But if we're talking about, let's say, $2 million in gain, then you're shielding the first 500,000 with Section 121, and then remaining 1.5, which is significant with 1031 exchange. So it's a combination of both. And sometimes it might not even make sense to sell the property. The property is already very cash flowing. You paid off the property, the mortgage is extremely low, or interest rate is 1 or 2%. Sometimes you can have that for the old properties. Then you can still keep the property, still sell it to yourself, not even outside party. So you can have access to the same cash flow and still qualify for Section 179, still qualify for 1031 exchange. So based on all the works, if you do it correctly, depending on your goal, you can keep the property, still rent out, not pay $500,000 for capital gain, and still do 1031 exchange if you have a privately owned corporation and you can manage that within yourself. I know, a lot of things, right? It's a simple question, but it can get complicated. That's why you work with professionals. I'm sure whoever you work with will be able to guide you through this. Just make sure you know what you want. If you don't even know what you want to do with the property, then they will probably say, hey, sell it. But if this property is good, if you want to keep the property with yourself, and if you want to enjoy the cash flow, and you also don't want to pay any taxes, you can use a combination of strategies to make it happen, is what I'm saying. So that's the first answer to the first question. We're going to move to the next one. The second question we have here is, we own a home appraised at $2 million with no mortgage. It was purchased for $250,000, and we spent $500,000 on renovation. Later, we took $700,000 HELOC and used it for personal expenses. Now we are selling a property for $2 million. We want to know how the HELOC affects the capital gain. Question is pretty simple. Any kind of loan never affects your gain. It doesn't really matter how much loan you have. Your gain calculation is pretty simple. How much you bought it for, your cost and renovation, that is also your cost. So for you, it's $750,000, and you're selling for $2 million. So you have almost $1.25 million of gain. That HELOC has nothing to do with it. It's that simple. If you have the rules of the capital gain 2 in 5 years, Section 121, you can now avoid that $500,000 gain. And then you can also do 1031 exchange on top of that to avoid the remaining $750,000. The math just works in my head. What I said might not even make sense to you. So what I'm saying is, in this scenario, the question was, how is my loan? It doesn't really matter if it's a HELOC or actual mortgage, you refinance into bigger mortgage, doesn't really matter. It has nothing to do with your gain calculation or for taxable income purpose, capital gain purpose. It's that simple. Before we move on to the next question, I just want to see if there's any other question, and then we'll move on to another one. Nope, my screen is frozen. Kens, did you see any questions?
No questions in the chat so far, but everyone, please feel free to ask them. We'll have time today to get those answered. So now, Ashish, do you want to go over the year-end tax planning before we get into TaxMD?
Yeah. Normally, let me just explain this, and you can share the screen after this, Kinsley. There are tax strategies you can use. There's so many tips. You can do all of these things before year end to save taxes. What I'm saying is this: how tax planning works for most of the people is the strategies that we share, almost 95% of them can be implemented in October, November, even in December. There are only few strategies that actually is urgent and it needs to be done throughout the year. Most of them can be done from now until year end, and you still would have same benefit. And that's what I'm going to talk about, a few bigger ones, but everything else is the same thing. So what Kensley was saying earlier, we have these 100 guides online. You can buy and use them by the end of the year. to actually save taxes. And I'll show a sample of maybe one of them. But if you're our clients already, you're getting them on a consistent basis. However, there's some strategies which takes time. Buying real estate. You could buy a property in December 25th, meet all the rules, and still save taxes as if you bought in January. But buying property is not as easy as signing a contract with a kid and hiring them for some modeling or marketing and paying them $10,000. You could do that in December, but buying real estate takes time, due diligence, renovations, putting in the service, meeting all the requirements. So there are only few strategies that it's important you need to think beforehand. Most of the others, you can do it right away. From now until the end of the year, you need to understand that. So, you're not missing out. And then we'll walk you through some of those strategies which people kind of miss. And we'll go through that in the next few minutes. Okay, so you can share the screen. I'll quickly go over them. I'm not going to go into detail of all of them because we can send guides to them. Okay, I'll just answer this quick question. Someone asks, how do financial advisors work with you? We don't do wealth management at all right now. The software we're building is going to have all these tax saving strategies, and it's going to have financial planning engine, meaning let's say you save $30,000 to tax savings. We give you that tax savings. You actually implement that and you save that. We'll also show you if you can use that $30,000, put it into your retirement account, your kids' education, your retirement fund, your insurance needs, what it will take you in the next 10 years, 5 years, whatever you can play with it. So that's how we're going to give a financial planning tool to a financial advisor. As a financial advisor, you can use our software as a SaaS product to advise your own clients on tax planning and financial planning. I know there are more robust financial planning software out there. The tax planning is not there. We'll show you the demo later on, what it could do and how we can use it. But in general, we don't do financial planning, but we do refer out people to financial advisor if our clients are looking for one. And so you can build that kind of relationship with us if you want. Okay, let's go to the another question, this quick presentation. So the first one, it says, it's very basic, but there's one way you can really avoid penalties. And I want everyone to understand this. Everyone knows if you're a W-2 employee, you have a paycheck that withholds your taxes every single month on the paycheck. You're good. So if you have enough withholding, there's mostly not penalties. Business owners, real estate investors, whatever you do outside of basically self-employed and business owner, you do have to make the estimate tax payments. But we do tell our clients that, hey, do not make these estimate tax payments. There's a way to have access to the cash throughout the year. And then let's say you were not able to do all these strategies you could do to not pay any taxes, then you can make the payment to the government at the end of the year through your W-2. So how this works is, if you have not been making estimate tax payments throughout the year and you're scared, what you can do right now is you can run a payroll for yourself and pay most of the payroll as withholding to government. When that happens, by default, the rule is that IRS assumes that you paid that throughout the year as a W-2. So there's no penalty. Just to repeat what I'm saying is, you are supposed to make a quarterly estimated payment based on your tax obligation. But if you have not been doing that, you can do that one time at the end from now until the end of the year. Okay, even in December, run a paycheck and pay everything to yourself as a salary and then withhold them. You do have to work with the tax advisor to talk about implications of self-employment tax versus FICA tax, all those things. Your advisor should probably be doing that. If they have not been doing that, then you probably need a better advisor. And sometimes you cannot even do that. If you're just Schedule C, then you're not paying yourself a salary. You cannot even do that. So you don't have to make estimate tax payments. The good thing is the software is going to help you do that going forward. And I'll walk you through that later on. But right now, I wanted to say, before year end, if you have not been making estimate tax payment, you can avoid penalties by running a payroll, is what I'm saying. Let's go to the next one. So next one is bunch deduction for bigger savings. This is very simple ones. Business owners, right? There are a lot of tax saving strategies, but as W-2 employees with capital gain, there's no way for you guys to save taxes. So the second one, what we're saying is, this has a charitable deduction. If you pay, let's say, $5,000 to your church or any organization you support every single year, if you're not itemizing, it's not helping you at all. You would be better off paying $20,000 1 year and not paying anything for the next 4 years. And again, it's bunching them in 1 year. So your itemized deduction is higher than the deduction. You actually save tax at the highest level. That's what the bunching deduction is. So this is the right time to think about it. If you have been doing those kind of things, you can do those kind of move this year to make it happen. As simple as that. Okay, I'm not trying to add any other strategy to top of that. I'm just focusing on charitable deduction because that's where the most impact happens. Same thing with medical expense, but most people don't even get that anyway. So I'm not going to go over that. And it's not something you can plan. The third one is harvest capital gain or losses. This is something I'll tell you, the two things I want to talk about. There's a wash share rule and there's setting your capital gain at the break-even point. I might actually show you this on my screen so you guys understand this. What is on my screen? It looks complicated, but This is why we're converting this to software. What in my screen is 10 years worth of work that we put in to build this tax planning modules. This Excel is basically a TurboTax. It actually first lists taxes and gives you tax savings. What I just told you on that is you need to understand this. Let's say you have a capital gain, you sold a stock for $50,000 gain, right? You need to understand how to do tax efficient investment. For this taxpayer, if you were to harvest a loss of let's say $10,000 that you already lost in your investment, there would be tax savings of $1,800. You need to do a tax efficient investment, and there will be a break even point. Again, you don't need to remember all of these things. You can put this in here saying how much you bought it for, what's the basis, and at what point you can break even by selling this stock. This is not even tax. This is about good investment and how it affects your taxes. If you're not following what I'm saying, it's okay. It's complicated. I understand that. That's why you work with a professional, and the software will be able to do so in the future. But right now, all you need to understand is one thing. First of all, understand if you have capital gain, sell it before year end to harvest a capital loss. But crypto works differently. This is what I want to bring forward. For crypto, if you already have a loss, you can sell and buy back that crypto right away, maintain the same position, and harvest a loss. You cannot do that with stocks. So if you lost $50,000 on a Facebook stock and you want to harvest a loss, you sell everything, you recognize that loss, and you buy back that stock right away to maintain your same position because you believe that it will go up, then there's a wash sale rule. You cannot really use that $50,000 loss for the stocks. For crypto, you can. The Bitcoin is up, let's say you bought into the hype, and then it went down, you lost $20,000. You can actually sell that right now and buy back the same crypto right away. So you didn't lose any money, you just harvest the loss is what I'm saying. There's no wash sale rule on crypto. That's the point I wanted to bring forward in this section. People miss that. A lot of people don't know that. Let's go to the next point. Charitable giving. That's something, I talked about earlier. I'm going to skip that one. Roth conversion timing. Okay. This is something you need to understand. If you guys don't understand what Roth conversion is, it works very well with business owners and real estate investors. Earlier, we talked about these guides, right? This is the perfect time for me to show you this. If you can see my screen, these are the guides we were talking about earlier. We share this, you can buy this online, but you need to understand why this Roth is not ideal for real estate investors or even business owners. Let me tell you why. And that's the topic we're talking about. So I'll go slow because it confuses people a lot. You can watch this again if you guys need more answers later on. Any business owner or real estate investors can really do a Roth conversion rather than do Roth to begin with when you do your finance and tax planning. What I mean by that is you don't have to remember this. And if you email Kinsley after this call, Kinsley just send these guides to them. Maybe this will help them understand this in written format. We have hundreds of these guides. We'll give this to you guys. What it does is it tells you why for business owners and real estate investors, Roth is not good. Why it's not good? What steps should we be taking to make best use of your retirement accounts, Roth versus non-Roth? And then we talk about examples and tables, when this works best for you, a lot of things, conclusion and like checklist. We give you that so that you can actually go and make the change. And why am I saying this to you guys? What I just shared is there are a lot of broken promises from CPAs, right? They will claim they can do tax planning, but they cannot deliver. They can deliver the product like I just showed you my screen. Throughout the Excel I showed you, we have the product proprietary. We share that with you guys if you engage with us, so I can give you the numbers and everything. But a lot of CPAs might know this information, but they don't have nothing to deliver. That's exactly why we are developing this software, which we're launching. So other firms will also use to do tax planning for their own clients, so they can actually deliver it. Okay. So again, let me back up and talk about that point. Why Roth conversion is important before year end and why you guys should be thinking the way you should be thinking. First thing is, everyone should understand what the traditional 401k or IRA is, right? You put money in there, and once you put money in there, you save taxes. Very simple. If you're in a 37% tax bracket and you and your spouse are putting this at $50,000 in a 401k as non-employee or employer sponsor for a 401k, traditional non-Roth one, how much tax are you saving? I'm going to do a quick math. This is around $50,000 times 37. I'm not even counting states. If I count states, it's probably like 42 normally. So that's $21,000 you're saving on $50,000. That's a 42% return. No other investment will give you that, just by putting in a retirement account. And then it grows tax-free. So why am I saying that to you guys is, some people miss the mark. They don't understand, okay, I'm going to actually put this in Roth account so I can retire tax-free. Don't do that if you're interested in real estate, if you're interested in owning a business in the future. The reason is this. This is the steps you should be following. And the guide the Kenzie is going to share with you will give you this step by step, but I'm just going to go over this really quick. What you're going to do is you're going to do a normal traditional IRAs and Roth account or any kind of retirement account. You're still going to save that 42% ROI taxes right now in your tax bracket, whatever it is for you. And then you can start owning this real estate, owning these businesses. And from now until you retire, you might have 60 years or 20 years or 40 years, depending on your age. You will be at that point where you're going to harvest these losses from real estate or businesses. And you're going to have more losses than you can handle that year. That year when you do Roth conversion. So that was the point that we know what Ken was showing on the screen. If you have enough losses this year that's above and beyond your income, you're going to do Roth conversion, or you're in a lower tax bracket, so that you can convert that traditional account to Roth conversion. You can do one every year. So you get the Roth account for free, basically. So you got the benefit for the first time when you actually put the money. Now you do the Roth conversion for free. And then now when you retire, you can take the money out tax free. There's three benefits in one. So understand the Roth conversion, when you should be using it, when it applies, when it doesn't apply. The guide is going to walk you through that, but that's what Kensley was showing earlier. And once you look at the guide, if you have any questions, just email Kensley. We can help you guys out. No big deal. Make sure if it applies to you, act on it before year end, because you can convert $500,000 if you want, $1 million if you want, if you have enough in the retirement account and if you have enough losses. Let's go to the next one. This is something in a very easy, use or lose your FSA. And if you have an FSA, use it. You're going to always lose it. That's why HSA is better. HSA, I say, is better because it works like an extra retirement account. If you have an HSA, you can put the money there. You don't have to use it. By the time you retire, if you have not used, if you're very healthy and you never get sick and you have never used it, you can take the money out as a retirement account. There's no penalties for that. So right now you can only put so much in the retirement account. You know this, right? Unless it's not enough for you to retire, then you can use HSA. You can use other things to put in retirement account, like even 529 plans for your kids. If kids turn out to be super smart, they never needed the money from 529 plans, you can use that for your own retirement. That's what we're saying. But there's a better way to do it more than FSA. But a lot of people will get FSA without thinking and then lose the amount. So make sure you use it before year end. That's all we're trying to say. Let's go to the next one. What type of losses are you harvesting to offset taxes in Roth conversion? Any. You can harvest any kind of loss. Let me clarify this. What kind of losses are you harvesting? Remember, you don't want to lose money to do Roth conversion. Okay, that's a big no-no. No one goes to the business to lose money so they can do Roth conversion. What I'm saying is, business owner and investor are in a unique position to do this. Let's say someone owns a taxi business. They buy hundreds of taxis and then they can write off the entire cost of taxis as a business expense. First year, they can do that. And they might have $1 million of losses. That loss now you can use against the Roth conversion. And the same thing applies to a restaurant. You open a restaurant, you open a food truck, you open another business. You open a new office and you do a lot of furnishing stuff and you have a lot of losses. That loss can be used to do Roth conversion. You buy real estate, you do cost segregation. I'll connect you with my good friend Brian. He will give you your cost segregation report, which can generate a lot of losses for you. And then you can use that to offset your Roth conversion. You can do the Roth conversion with the real estate losses. Any kind of losses can be generated. Most people try to choose first year operation of a business or rental real estate. Mostly rental real estate. People will buy a short-term rental. People will try to do apartment buildings. They will buy and try to become a real estate professional status. Use that phantom loss. It's a paper loss to offset their taxes, either W-2 level or Roth conversion. Just to recap on that one, the question was that the losses comes from business and real estate. But mostly people do real estate because it's a phantom loss, meaning it's not even your cash. It's a bank's money and you're not losing it. It's depreciation. If you don't understand this, email us. We'll walk you through why wealthy people choose real estate. Okay, let's go to the next one. Clean energy upgrades. Again, if you guys are doing some renovations, there's some credits you can get for buying energy efficient assets. If you go to any websites which sells appliances, they will sell that information to you saying, hey, buy this, it's energy efficient, and you get credit. Thanksgiving is coming, right? And Black Friday, everyone buys appliances that time. Good time to look for energy efficient so that you actually save taxes while you're buying those Black Fridays and deals. That's all, nothing crazy.
But you have to claim it by the end of this year, right?
Yeah, they will buy it this year. And if you're buying for rental properties, it also qualifies sometimes. And again, not just appliances. There's windows and doors and battery storage, so many things. And some of these are supposed to expire too, because not everyone believes in energy efficient and in a clean energy, so they're trying to get rid of this. So this is a good year for you guys to do this and still get benefit. But I have a feeling it's just going to come back. They do this and it comes back. Business owner asset moves. What this is pretty simple. This is the last strategy and very basic one. And most CPAs will just give you this strategy, which I don't even say this is a strategy, but sometimes it's good if you need one. Most tax advisor will tell you, hey, I'm going to save taxes. And you will say, oh, you know what? Go spend money. That's what they say. You made $100,000 income. Go spend $100,000 so you don't have to pay any taxes. That is one of the worst way you can save taxes, right? You made $100,000. You want to take that $100,000, go on vacation or buy a Lamborghini. That was better use than going and spending on a printer on your business and have no access to cash. But most CPAs will say that. If you actually need the printer, go buy it, is what we're suggesting. But do not just go buy to save taxes. Don't go buy 10 printers and put it in storage to save taxes. That's one of the worst things you can do. But if you need one, this would be the year you do it. But also remember, just don't go and buy it. If you have already used other strategies like real estate we talk about and other losses, and you already lower tax bracket, there's no need to do that. You just don't go buy $5,000 printer to save $50. But if you're in highest tax bracket and this year happens to be year where you have not done any other strategies, then yeah, buy a $5,000 printer. If you're in 42% tax bracket, then you could save $2,100, right? Do that math. The software will do that, or your CPA will do that in the future. But do that math before doing any kind of strategies. But that strategy, how you do it is, you can do that in December 31st. You just have to buy it before year end, pay it, and then put it in service. If you buy a printer, just plug it in. Is what I'm talking about. But you have time to make those moves. One last thing I would say for real estate is, from now until the end of the year, even if you buy a property, let's say you close a property December 15th, you put it in service, either long-term or short-term rental, you meet the requirement, you can still offset 100% of your taxes, depending on how much you make, even if you have business or non-business income. That strategy still applies from now until the end of the year. Don't miss that. If you do not know how that works, talk to us, we'll help you out. But I hope every one of you in here knows this. If not, then again, reach out to us and we'll help you with that. I know I said a lot of things, guys. You digest those information. You can rewatch this. You can reach out with questions. We are not greedy. We have so many people reach out. We'll give free information, free guides. Just help them out. We give so much information on our social media. Follow us on social media. It's going to get even better and better as we launch the software, because we have to advertise and we'll share a lot of knowledge by necessity. So that is all for what is presented on the actual questions and tax saving strategies. We have these detailed guides on this year-end tax savings, which goes in a lot more detail. Again, so if someone reaches out to you, just attach the guide to them and just give it to them. It's 10 times what I just said. So that's all for now. Now we're just gonna shift our focus to the software, which we're building. And I'll tell you why I'm saying this to you guys. We're just doing a sneak peek. We are doing a soft launch next month, and then it will be fully functional next year. When I say fully functional, how the software works is, it's designed for direct users, taxpayer who goes online and wants to save taxes, and is going to be used by other CPAs to do tax planning for their own clients, or CPA firm. This is going to be for both. And I'll show you, how it looks and how it's done. But I have to clarify a few things here. Most CPAs, I told you before, cannot deliver tax planning. We struggle with that. We have all these resources and guides. We have 80 people in our team, and we have Excels and stuff, and we still struggle delivering tax planning. This is so hard because every situation is different. Everyone is different. We have the tax planning file, and there are softwares out there which claims to do tax planning, but we use all of them and it's rubbish. Clients are so mad and it's glitchy. That's why we are developing the software last 3 years. And we have spent significant amount of time developing this for the last 10 years, first of all, and then significant amount of money and stress in the last few years trying to make this happen with AI. And you'll see this. What it does is, it not only gives a tool for all the CPAs and for my friends, the CPA friends, to do a really good delivery of tax planning to their clients, because they're underserved. A lot of clients are underserved in tax planning. But that's going to happen. I'm not worried about that. What I'm focusing on is for taxpayers. Like, I give an example. We charge, if you go to our website, you see our tax planning, it starts from like $4,000. We have clients who pay us $20,000 for tax planning. If you could learn the basics, you could do your own tax planning going forward in AI-based software with this software online. No need to download nothing like TurboTax, right? TurboTax files your taxes. This does your tax planning. And eventually this will also file your taxes. And then we are going there. But right now, you could just answer a few questions and it will give you a detailed implementation plan. And I'll show you that. I'm not just going to talk about this. I'll show you how it works. So that you're not paying $20,000 to your CPAs. Or some people don't even have that kind of money to go and pay CPAs. That's why they don't never do tax planning. If you make $100,000 as a family, you're not paying $5,000 or $6,000 for CPAs to go and save $20,000. You could, but you never make that move. So we're trying to break that cycle. You could go and pay $500 online and only pay after you save taxes. If you get the detail, oh, I can do this. Let me pay this and I'll get this report and I'm going to save tax and we'll give you that. And you can ask questions. So I'm going to walk you through that, but that's the gist of it. Now, how does this work? I'll walk you through in the next few minutes and you can ask questions along the way. If you're interested, we'll give you a better version to test it out. Again, you guys have to understand this. how software works most of the time is bunch of rich people and VAs get together and try to solve problem in the market. And they'll get a bunch of people and try to create a software to the market which is being underserved, and it fails. There's so many software that has been started like this and failed. We didn't do that. There's no investors. This is owned by us. There's no VCs. We build this for CPAs, from a CPA. We build this for our clients because we know the pain points. We know exactly how this should look, what kind of questions should we be asking, so it's easy for you guys. But we're not perfect either. That's why we know if you want, we can ask you to look at this, play around. And if for that, we'll give you some kind of incentives. We give this for free for a year or something. Okay, we can talk about that. If you have interest, please let us know. Is what I'm saying. So let me just walk you through this. And then my team was concerned, oh, you're going to show this. What if people just steal your idea? I'm going to tell you, this is 3 years of work. If you can steal this in a year, go ahead and steal it and make it happen. I'll be happy. I'll support you and spend millions of dollars while doing so. And I'm not kidding. If you can make another version of this, I did the math. There's 164 million people, taxpayers. This is big enough pie for everyone to be successful if you can do what I'm doing. So I'm not trying to really do this. So how this is going to work is, what you're going to do is, again, this is going to be for tax professionals as well, which is launching in early next year. For the taxpayers, you're going to go in there and you're going to put your high-level income in your state and your filing status. You just answer 3 questions and you're going to go to this interface, which is going to give you all the tax savings, everything. How it's going to look, it's going to look like this. So this is 3 steps you're going to do your tax planning. First step, you're going to choose whatever avatar you are. It could be multiple or one of them. Once you choose that, you're going to get some questions. It's optional. You don't even have to answer them. You're making some assumption. But if you want personalized report, you can answer every question you want to answer. Again, you're not paying. You're not asking for emails. You're not asking for SSN. We're not even asking for your name. You can literally just put your information with numbers and just get the tax report. Secure, you're not giving us anything. You can give us your previous tax returns, your W-2 stuff once you log into your portal and upload securely. But right now, you're not doing anything like that, okay? You just answer questions. Based on that, you'll get strategies here. Then you're going to expand on it and you can answer specific questions to your strategies. Once you do that, we're going to first calculate your tax. Let me explain this. How is this different than TurboTax or any other people? Any other software, why can you do this ChatGPT? You might be thinking, oh, why can't I just go and say, hey, this is my situation. How can I save taxes? TaxGPT doesn't do this. We're actually first calculating your tax. We have this tax engine we built for the last 3 years on the background, which is TurboTax. It actually calculates your taxes and it puts in a 1040, actually calculates your tax first. Then, based on your strategies, based on your avatars and questions you answer, we apply all the strategies on top of that. So when we say, listen, charitable giving, you could go ask ChatGPT, hey, I'm going to give $5,000 to charity, how much tax I can save? You could probably save $2,000. It's not making any guesses. It's actually applying that to your tax return in the background and telling you, hey, this is how much you're saving, dollar for dollar amount. So you can actually be confident, okay, if I do this, I can actually save this much. And there's going to be hundreds of strategies like that. That's what before and after is. So step 1, you answer the question. Step 2, you can select which strategy you want to apply. You can filter them. And then you will see tax savings right here. You will see what is the cost for that. And you're going to get your ROI. Again, this is the rough amount here. And you can also see the report right here. We're not trying to hide anything. You go and look at the full report here. Then you can go and download this. When you go download this, the pricing is not set here, okay? But you can pay one report for $400. Check, move on. You can also get a free report. Literally, you can get your tax calculated for free and get a free report, just email report. But you're not going to get any portal and any recommendation stuff. If you go in and you'll get your own portal, there you can do what if scenarios, and I'll walk you through that. So that's the concept. That's the sneak peek I just wanted to show you. So when you actually go in the website, this is what I'm talking about. You select avatar, you answer some questions very simply. They say this is a sale of home exclusion. The question that someone was asking me earlier, hey, what happens if I sell this for $2 million? You can literally go in, just put, okay, I'm going to sell my house for $2 million like this. And then, and it will calculate before and after, ROI and everything. This is not finalized yet. And your report will become here. You can just look at your report like this, a detailed AI-based report. Your report will look something like this, not finalized, but you'll get a detailed report of your tax planning where you go in there and then you'll see, again, hundreds of them. You will see what questions you answer, what are the assumptions we're making, because there's going to be some assumptions, obviously. What if you're selling your property? What if you're maximizing? So you can ask AI to change scenarios. Oh, by the way, I'm actually going to sell my property this year. How can I do that? And AI will just run a scenario. You can say, okay, I ran a report, but I want to run another report where I have new kid coming and I'm getting married. Rerun it, and AI will run it for you, going and changing everything. That's the capabilities we have. So that's what the software is. So what I just showed you in my screen is a web version, meaning direct user. You could, as a taxpayer, go online, go answer these questions really quick on your phone, get a detailed tax report, and move on. And then you could log into your portal where you can calculate, what if analysis, ask questions like I said, and then you save there and always come back. And if the new tax law changes, you can apply the new tax law, it will rerun your report and see how much you can save. This is something happens throughout the year. You get married, you sell a property, you buy a property, you start a new business, you're going to sell your business. You can come, implement that, get a new report, and know exactly how to address your situation. So that's what we're going to do. But we also understand that it might not be for everyone because it's complicated. If you want, you could actually get this report online, then schedule a 1-hour call with me or one of our CPAs to implement the plan, answer questions. We're not just giving you the software and asking, hey, you go figure this out. We'll give you this detailed action AI, you can implement it. But you can schedule a 1-hour call with us as an optional add-on to implement the plan. We charge people $10,000 to give you a plan and then implement it. I'm saying you can pay $500 to do and maybe pay another $400 to schedule a plan. So 1/10 of the cost, you're getting the same service, but maybe probably better than what we can deliver. That's the first thing. Second thing is this. Let's say you don't want to even work with us. You could just go online, you could run this plan, go to portal and invite your own CPA. You can invite your own tax advisor to your portal and you can go over your plan together. Because your CPA might not be capable of doing his own plan. And I'm not trying to say anything bad about any other CPA, but not everyone can do that. Because not everyone has capacity or knowledge to do tax planning. So you can actually bring them in your portal rather than paying them $10,000, or they might not even know how to do it. Bring them in your portal and ask them to answer some of the questions for you. You can have your own CPA come in. So that's what it is. I know I said a lot of things. If you follow us on social media, you'll see this in 3 weeks and you can do a beta testing and stuff and you can play around. Okay, it's going to fully launch next year and so you can do fresh tax planning starting 2026. It's going to be good. Kensley, did I miss anything or you want to see anything? Let me know.
All right, we have the QR code for the wait list that you all can join, and you'll get updates before anybody else if you join that wait list, and different resources will be shared. So I'm gonna throw that on the screen real quick and give you a few minutes to scan it with your phone. And I'll also share a link to this in the email, in the follow-up email that will go out after this is over, probably today, tomorrow, or Friday.
Yeah. And I'll clarify one thing for you guys, okay? Remember, like I said, the whole reason we're building this software is to do a better delivery of tax planning to entire community of taxpayer. This is not just for real estate. You can choose your avatar, business owner, retirement, W2 employees. You could go run those scenarios. You can only pay if you save taxes. You're not just paying and then making guesses. You can answer everything. We're not limiting any features. You can first see how much taxes you can save, and then you pay and get a detailed report. It's all on your screen. But once you log in, everything is same. Every year you can come back and rerun the new tax report. All the questions you have answered, always going to be there. You can always update that with an AI saying, hey, this thing's changed this year. Please update. There's going to be entity stock stream module, meaning you can ask, okay, I'm going to create an entity structure. And how do I structure my LLCs? And AI will automatically create that for you. We are working on so many things. Okay. We have 40 full-time developers working on this. You guys have to understand this. It's not normal. Any kind of minimal viable product when software is launched, 1 or 2 full-time developers will work on it to get a minimal product. And then once it starts getting revenue, they expand the team. We have 40 full-time team member, AI consultant in the US. We have 40 people working on this nonstop. It's a lot of investment from our perspective to give you guys a product that you guys will really like. And then you'll see and you keep on seeing this around. So again, ask questions. We're just trying to make sure you guys have access to good tax planning without spending $10,000 going forward. That's all. Again, if you guys have any questions, please reach out to us. We'll help you guys out. And by the way, we are not trying to get rid of our clients who are paying for tax planning. If you want to engage investor-friendly CPA every single year for tax planning and pay $5,000, we'll take it. We're not trying to lose that money, but that would be a disservice. And if you guys know anything about us, we always tell our clients, we're not greedy. We'll tell you how to get rid of your tax returns so you don't have to file it by doing entity structuring. We try to make you as lean as possible from your tax compliance perspective, so you're not losing money and saving most money. The software is only one way to do that for us, okay? So that being said, thank you everyone for joining in. Kenzie will reach out with that guide we shared about earlier in the next few days. If you have any questions, go to the website. Everything is on a screen. Email us. We'll get in touch with you. We're extremely responsive. And then follow us on social media. So with that being said, thank you again, everyone. I appreciate everyone joining in. You can see we go very fast, we go very quick, and we have a lot to share, and only good things are going to happen in the future. Kensley, thank you for putting this together. Thank you, everyone. Goodbye.
Thanks for joining, everybody. You'll be hearing from me over the next few days.
Thank you. Bye-bye.